ICICI Lombard is now on our radar. It was a good quarter for the company. Net premium witnessed a healthy growth while combined ratio has also improved. We have Mr. Gopal Balachandran, CFO and CRO at ICICI Lombard now joining us to take some questions. Mr. Balachandran, good morning. Good to have you with us here. Thanks very much. I have to begin by asking you what the recent tragic floods that happened in Sikkim and some of the other sort of incidents which have happened recently. What has been? Have you been able to put an estimate to your exposure to these, and would you like to share that with us?
Yeah. So good morning, Prashant, and good morning to all your viewers. So I think when you look at it in the context of some of these flood or cat events, in the past, as I have mentioned even earlier, we used to talk about maybe at best one or two cat events in a year. Today, possibly what we are encountering is maybe one or two events every quarter. So thanks to maybe some of the climate change related events. Having said that, I think in Q1 we had the cyclone Biparjoy, which had a significant impact. On the net claims for us, we had an impact of almost about 35 crores. In Q2, I think we had seen a lot of events, particularly, let's say, some of the floods that happened in the northern part of the country. Now, there again, obviously, we did get impacted. We had roughly close to about 800 claims getting intimated. And insofar as the net impact of those losses on our P&L, that number was roughly about 48 crores. So every quarter, I think we do get to see some of these cat events play out. Insofar as the way we manage the overall exposure is we also put in place adequate reinsurance support so that in the event we find losses exceeding a particular threshold, they are kind of reinsured and we get recoveries from the reinsurance partners. But on balance, I think when you look at it, what we have also seen, consequent to some of these increased catastrophic losses, there has also been an increase in reinsurance rates. And therefore, to that extent, logically, this should also translate into better pricing insofar as the overall market is concerned.
So 35 crore net impact in Q1 because of events, 48 crores you said in Q2. In Q3, what should that number approximately be? Would it be in the same range or would it be much higher?
Very difficult, Prashant. I think we will obviously have to wait for, let's say, these events to play out. I think we only expect that the scale and the magnitude of these events possibly kind of are limited. But we will have to wait and see. Maybe we'll be able to give a better guidance when we announce numbers in Q3.
Sir, I believe you had given a guidance of high teens growth for the gross direct premium income. Does that stay for the full year?
So, Reema, again, when you look at it, you are absolutely right. I think let's look at it from, let's say, our half year or let's say even on a quarter-on-quarter basis. On a half-year basis, the industry grew at roughly about 15%. We grew at about 18%. For Q2, if you look at it, I think the industry grew slightly lower at about 12.5-13%. Vis-a-vis that, I think we grew at about 17%. Now, when you look at the longer-term growth trajectory for the GI sector, for the last 23 years, the industry has grown at about 15-16%. So there is no reason why this market, as I said, even for the half year, has grown at almost about similar numbers as 15% or thereabout. So even for a full year basis, the expectation is with activities happening across lines of businesses, markets should continue to grow in high teens. And whenever the markets generally have grown responsibly, ICICI Lombard has generally delivered 100 to 200 basis points growth over and above the market growth rates. So hence, that's the kind of trajectory that we would kind of largely work with and see the developments of the market as on an ongoing basis.
All right. Hi, sir. Morning. Could you give us a couple of numbers? So what is your combined ratio likely to move to? It's cooled off 120 basis points odd. Where do you end this year with? And also your claim ratio, that as well has come off close to 200 basis points.
Yeah. So Nigel, again, I think when you look at it from what we spoke even last time, I think we have spoken to the market towards bringing down our combined, which used to be in that range of around 104% plus earlier. The objective is to kind of bring it down to 102% by the end of FY25. And we are pretty much on course to in that direction to get our combined down to those levels. In terms of the split between the loss ratios and the expense ratios will be purely a function of what kind of mix of businesses that we write. So very difficult to specifically call out in terms of what exactly could be the loss ratio and what could be the expense ratios. But broadly, if you look at it, from a loss ratio perspective, we have kind of stayed in a range of around between 70 to 75% in that kind of range. And when you look at the expense of management number, let's say for this half year, we are operating at an expense of management closer to about 26.9%. But well on course towards the objective of combined going down to 102 by the end of next financial year.
So you operate across various segments: motor, health, crop. Crop, your presence is quite less. But amongst all these segments, where is it that you are seeing maximum growth? Where is it that competitive intensity has picked up? Can you just give us some industry trends that you've observed over the last 3 months, and what can you guide for the second half?
So, Reema, it's a great question. So, again, if you look at segments that you rightly mentioned, whether it's motor, health, or commercial lines, all of them are preferred segments for us. And directionally, I think when we look at the opportunity that each of these segments presents in the market context is very, very positive. And within that, ICICI Lombard, obviously, as I said, wants to kind of leverage on this incremental growth potential. If you look at each of these segments, so let's take health as a category, for example. For the half, historically, also in general, I think we have been kind of growing quite well on this segment. But if you look at just for the half year, the industry grew at roughly about 24-25% on the health as an overall category. ICICI Lombard grew at almost close to about 31%. Now, this growth in health was aided by growth both in retail health as well as, let's say, corporate or employer-employee segment. So in that sense, I think we have been able to have an outperformance insofar as the corporate health segment is concerned. But on an increasing basis, we are also witnessing slightly elevated levels of competition in this particular segment, and therefore we will see how things play out for the rest of the year. Insofar as the commercial lines is concerned, which is the typical product offerings that you make to a corporate, whether it is with respect to fire, engineering, marine cargo, liability, etc., etc. There again, I think we have had an industry-beating number. Industry has grown at maybe a high single-digit number. Our growth has been upwards of 16-17%. And this is something not just this year. Consistently over the last several years, we have been able to have outperformance on commercial lines as a category, and we believe even the trajectory going forward looks very, very promising given the scale of infrastructure investments and activities that is happening on the ground. Should kind of help us to sustain similar level of outperformance on the commercial lines. The third category on motor, again, if you look at that's one segment, we have been a bit guarded given the relative higher competitive intensity that we have seen in this segment operating particularly over the last 18 to 24 months. But of late, I think we have seen a bit of easing happening in the market. It still remains competitive, and hence we have been taking a guarded stance. But on a sequential basis, when you look at our growth trajectory, again, it is looking very, very promising. For example, we grew in Q1 on motor by roughly about 5-6%. Q2, our growth is about 11%. And the gap between us and the industry growth rate has significantly got narrowed. And with now, let's say, the changes in the expense of management guideline playing out, and roughly 50% of the market operating at a threshold higher than the stipulated levels, if once that course corrects, we should also be able to get better growth rates. And towards the end of the year, we should see even growth in motor for us in line with the industry numbers. For ICICI Lombard, the expense of management has been well within the threshold.
Okay, all right. On that optimistic note, then we let you go at that. Thanks so much, sir, for joining in and giving us all those details, and wishing you all the best for the second half of this fiscal.